Welcome back. You're watching Market Fatafat on ET now, a show where we get you all those stocks buzzing based on news flow and technicals. And talking about technicals, now we have Ashish Kyal joining us on the show. A very good afternoon to you, Ashish, and festive greetings to you and your entire team. Let's kickstart with your first stock, that is Godrej Properties. How is this one looking on the charts to you? We know that realty seems to be the talk of the town right now.
Thank you very much, and wishing you and all the viewers very warm greetings for the festival. And as the first topic, Godrej Properties, we can clearly see has shown a very strong breakout above 1750. From there, the stock retested that level and is now again moving higher. So the overall tone for Godrej Properties is bullish. One can create long position here. We can expect maintain a stop loss on the downside around 1700 and for the 1720 and for the target of approximately 2000 levels.
Okay, let's move on to the next stock. And Mamakshi, AIS Life is the stock that you picked out for us. This one is in focus on the back of its numbers.
Well, yes, this stock is in focus on the back of its Q2 numbers. Operationally, when we look at the company's numbers, they have come in line with what the street was largely expecting. Let me quickly take you through them. Revenue is seeing an uptick of almost 9.7% on a year-on-year basis. When I look at the EBITDA, that has seen an uptick of almost 19.5%. Margins have also seen a marked improvement of almost 300 basis points, and the net profit has, however, come in flattish at around 2.6% on a year-on-year basis. Now, let us look at what Macquarie is saying on AIS Life Sciences. They believe that the numbers were in line with what they were expecting. The company did announce that they were acquiring Biocon Biologics, Nephro as well as Derma units for around 366 crores. And in fact, they maintained their FY24 revenue and EBITDA guidance, but they believe that this acquisition is expected to be earnings accretive by FY26. And in fact, they're expecting the acquired business EBITDA margin to improve to 30% in the next year as compared to 20% currently. And on the back of that, they've actually maintained an outperform rating on AIS Life Sciences, target price of 1,100 rupees per share. So a big thumbs up coming in from Macquarie as well. Good set of numbers. AIS Life Sciences in focus today.
Right. Moving on, Shesha, let's talk about Sani Ceramics and why is this one in focus?
Well, yes, very strong set of numbers is why the stock is in focus today. In fact, it is sitting on with gains of nearly 3.5%. Reported its numbers yesterday. Revenues have seen a solid uptick of 6% on a year-on-year basis. Margins have also expanded. Company reported margins at 9.8% versus 6.8% same time last year. So on a year-on-year basis, company has reported 300 basis points margin expansion. As far as volumes are concerned, they have also seen an uptick of about 6% on a year-on-year basis and about 9.7% on a sequential basis. Expenses have come down, because of which margins have risen. Power and fuel costs as a percentage of sales have contracted by as much as 700 basis points sequentially. So yes, very strong set of numbers, because of which the stock is gaining nearly 3.5% today. And important to note that the stock has already run up quite a bit. In the last 6 months, the stock is up 27%, and on a year-to-date basis, the stock is up 45%. Strong set of results. The stock is up 3.5% today.
Okay, that is a stock for you all to watch out for. But let's move on and talk about City Union Bank on the technicals and charts. And Ashish, City Union Bank, how is this one looking like? You know, are we expecting a good run up here?
Yes, indeed. If you look at it, it has been an outperformer, given that we saw some kind of a correction. But right now, it's giving a very strong breakout on the upside from that 140 levels. I think it is just starting the up move, and it is a good entry at these levels. So one can trade long positions. Maintaining 140 as a stop loss for the target of 160, and the risk reward looks very appealing.
Let's move on and talk about the next stock, that is Gujarat Narmada Fertilizers, that is in focus in as well. And this one is on the back of its numbers. When you look at the revenue, the revenues are actually seeing a decline. Revenue came in at 2,080 crores versus 2,587 crores. Even the profits of the company saw a decline as well. 178 crores is what the profits came in at versus around 237 crores last time. Now let's move on and also look at the operational performance of GNFC, and seems like a bit of a subduedness that has come in terms of the performance on the operational front as well. Margins, yes, slight bit better, and 200 basis point expansion in terms of the margins. So yes, keeping an eye out on this one. Overall, seems like a muted day coming in for the stock price as well. Sharper fall, but recovered from those falls, down as of now 2.5%.
All right, moving on, let's talk about Welspun Corp. It hit its highest levels in about over 15 and a half years. If you look at the stock price, also at 481, the stock has seen sharp uptick as well. At one point in time, it was trading higher by about 6.5%, highest level since Feb 5th, 2008, and the stock is actually gaining for a third consecutive session. The company has reported a consolidated net profit of about 385 crore rupees. This against a loss about 56.6 crore rupees a year ago. They're saying they see robust demand in the cold steel segment during the quarter, and also we spoke to a manager a short while ago who said the demand environment is exceedingly good, especially globally as well, and each segment that they are present in. Also, we have Manish Chokani also who joined a short while ago on ET Now, who also said that all of these global factors are working in favor of Welspun Corp, and as you can see it on your screen, the stock is seeing a sharp uptick, 5.4% as we speak.
Okay, let's move on to the next one, and Apollo Hospitals on the charts. How is that looking? Because it's remained in the range of around 4,600 to 5,200 in the last 6 months, Ashish. Should we expect it to start moving up above those levels now?
Yes, it's like, because rightly pointed out, it has been in a range, and if you look at it, it's just breaking out that range in today's session. So I think it is just starting the up move. And if you look at the pharma sector, the entire pharma space has been an outperformer, pharma and healthcare, and I think Apollo Hospital is just giving a good entry at current level. So one can create long positions here, maintain a stop loss on the downside around 5,075, and expecting a target of 5,400 and possibly higher.
Moving on then, Vamakshi, coming to you, Som Distilleries. Why is this one in the spotlight?
Well, Cheryl, let's take a step back. November 7th, there was a rumor that was circulating around the market wherein, the rumor said that IT search was ongoing in various branches of the company. And in fact, on November 7th itself, the stock tanked almost 10%. But nevertheless, the stock recovered a part of the losses on November 8th. But today, again, we're seeing a very sharp fall in the counter, down nearly 3% as of now. And that is because the company has come ahead and announced on the exchanges and in fact confirmed that search and seizure operations by Income Tax Department is on at the company's corporate office as well as factories since November 7th. The company has been cooperating with the officials during the proceedings and has responded to clarifications as well as details that were sought out of them. The business operations of the company continue as usual and have not been impacted on account of the search, but that is the news flow surrounding Som Distilleries, and as of now the stock is under pressure today, down nearly 3% as you can see.
That's Som Distilleries for you all in focus. But let's move on, talk about Indico Paints. This one is buzzing in trade today, up with gains of almost 2.5%. Last 6 months managed to see gains of around 16%. Ashish, at 1,470, what is Indico Paints on charts now indicating?
See, if you look at Indico Paints, you can clearly see it has managed to break out above its 20 days and 10 days. So the average is, there is a moving average crossover happening, and it seems that the downward move which we witnessed is over, and we are starting the fresh leg on the upside. Volumes are also picking up along with the big candle. So I think the overall tone is bullish. We can expect a target of around 1,600 on Indico Paints. And on the downside, one can maintain a stop loss around 1418 level.
Right, Ashesha, coming to you, United Spirits. Why is this one in focus?
Well, it is on the back of results, and in fact it reported better than expected set of numbers. The stock was gaining in trade earlier in the day. It is now off the highest point of the day, largely flat as we speak. Revenues have been flat on a year-on-year basis. Margins, they've come in at 16.3% versus 15% same time last year. So on a year-on-year basis, margins have expanded by as much as 130 basis points. As far as volumes are concerned, overall volume growth stood at 1%, but P&A, that is the prestige and above segment, has shown strong growth of about 4% on a year-on-year basis. Remember, the company has been focusing on premiumization, and hence this segment is what they've been focusing on. 4% growth is what this segment has registered. As far as management commentary is concerned, they say inflation continues to be a concern. Inflationary headwinds continue to remain challenging for the company, and that has been impacting margins for several quarters now. Analysts believe that P&A growth was driven by continued premiumization tailwinds, improved footprint, and innovative offerings that have been done by the company. And analysts also believe that they cannot rule out another round of earnings upgrade for United Spirits. On the back of results, this counter is in focus.
Okay, on that note, let's just sip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.
Welcome back. You're watching Market Fatafat on ET now. Bottom of your screen, you have Adani Ports numbers that are flashing. You'll see it in a short while. But Ashish, coming to you, ICICI Securities, that's the counter that you're tracking for us. And how is it looking on the charts?
See, ICICI Securities had been consolidating for quite some time, but today it is giving a good breakout, formed a good bullish engulfing pattern also. I think the stock is headed towards the level of 700 on the upside over near term, and on the downside maintain a stop loss of 640 levels.
We'll keep an eye out on those levels for ICICI Securities. Let's move on and talk about Gujarat Alkalis. Why is this one in focus? After the numbers came out for the company for Q2, we saw a decline coming in the stock price as well, because the revenues of the company have seen a sharp fall of almost 14%, coming in at 971 crores. The company actually went into a loss and reported a loss this time versus a profit last year. And when you look at the loss, that's come in at 18.4 crores versus the profit last year of 60 crores. In terms of the operational performance, also weakness seen there, because margins have just come in at 4.6% versus 20%, so a sharp contraction in terms of the EBITDA margins of the company as well. So clear weakness that we've seen coming in the stock price. Overall, the EBITDA was also down by almost 80% as well. So clear pressure coming in on this one, keeping an eye out on that, down 3.2% as of now.
All right, Ashish, coming to you, JK Lakshmi Cement. How is this one looking on the charts to you? A stock that we don't speak about quite often, given the fact that it is a part of the cement space.
Yes, but if you look at the cement space stocks, I think they have been started buzzing around, and JK Lakshmi just few days back showed a very good move from 680 levels towards 800. Now showed a pullback and again ready to getting move on the upside. So we can expect JK Lakshmi Cement to move towards the level of 860. That can be the target. On the downside, the support for the stock is at 750 levels.
Okay, let's move on to the next one. And Cheryl, I believe the pharma space and Piramal Pharma specifically is in focus today as well.
Absolutely, Vinny, and pharma space has been in focus of late, and for good reasons, that is. And Piramal Pharma also is in focus on back of a very good reason coming in. The stock at one point in time saw an uptick of as much as 4%. It is gaining for a fourth consecutive session. The stock, or rather the company, said that the US FDA has issued an establishment inspection report, or known as EIR, for its manufacturing facility at Bethlehem in the United States, and after closing an inspection. So a positive trigger coming in for Piramal Pharma getting the EIR from the US FDA. The stock is still holding on to good gains of about 2%.
Okay, that is Piramal Pharma. Let's move on and talk about L&T on the charts then. And Ashish, what is it that L&T's charts are now indicating?
See, within the capital goods space, L&T is a strong performing stock, and we can clearly see stock made a low at around 2850 just about a week and a half back, and from there it is now back on the upside. So looks like that it is going to cross its previous 52-week high of around 3125 as well, and we can expect it to move towards 3200. So the target for L&T is at 3200, and on the downside one can maintain a stop loss at 2940 levels.
All right, Ashish, the Mamakshi, coming to you. MCX is the counter that you're tracking for us. I believe earnings candidate?
Well, yes, Cheryl, earnings it is for MCX. In fact, the stock is declining in trade today. It's down almost 5% as we speak, and that is because the company reported a weaker than expected set of numbers in the second quarter. Yes, we did see revenues inch up by almost 13% sequentially to 165 odd crores, but below that everything has just gone downhill. EBITDA loss is what the company has reported this time around at 28 odd crores versus an EBITDA of almost 10 crores. The margins have also as a result come in the negative territory versus expectations of positive margins of almost 14%. In fact, when we talk about the net loss that has come in at almost 19 odd crores that the company has reported this time around, as compared to a net profit of almost 20 crores that the company reported in the same quarter last year, and it was mainly on account of near-term elevated software expenses. Definitely overall volumes did improve by almost 86%, but the futures volumes actually saw a downtick of almost 23%. Nevertheless, brokerages believe that this was a one-off quarter. They do continue to see robust traction in option volume, new product introduction as well. But as of now, on account of weaker than expected numbers, MCX is reeling under pressure.
Okay, and Ashesha, Mascot Rock, this one don't focus on the back of its numbers then?
Well, yes, and the stock is off the highest point of the day, but despite that, it is sitting on with gains of nearly 2.5%. It has reported solid set of numbers. Revenues came in at 1828 crores, which on a year-on-year basis is an uptick of about 7.5%. Margins have expanded a whole lot, 9.7% versus 6.9% same time last year, an expansion of about 300 basis points on a year-on-year basis. Profits have risen by nearly 56% on a year-on-year basis to come in at 333 crores, and EBITDA has also risen by about 50%. So very strong set of numbers from Masgao Dock, and the stock as we speak is gaining over 2%.
Alright, that's Masgon Dock for you. But Ashish, coming to you, Info Edge, this one was in focus on back of his numbers earlier this week. But on the charts, how is Info Edge looking to you?
Info Edge since around 5 days has forming a very classic bullish candle, and it has not even given close below the prior day low. So the overall trend is bullish unless we see a close below the prior day. That's a simple trend following method. Having said that, I think any dip here, use that as a buying opportunity. We can expect the stock to reach towards the level of 4,800, and on the downside 4450 is the important support.
That is a view coming in from Ashish on Info Edge, but that was the last stock for today. So thank you so much, Ashish, Swati, Ashesha, as well as Vamakshi for joining in with us, and thank you so much viewers for tuning in to ET Now. It's a goodbye from Cheryl, myself, as well as the team who put this show together.